Welcome to Market Call. I'm Lindsay Biscaya. Brendan Caldwell is on the show today. He is president and CEO of Caldwell Investment Management, and he will be taking your questions on North American Equities. And here's how you can reach us. You can call us toll free, 1-855-326-6266. You can also email us at marketcall@bnnbloomberg.ca. Good to have you. Thanks for coming in.
Well, it's always great to be here. This is my last show in this building.
I know.
I'm
last
a little
show
bit
downtown.
heartbroken.
Yeah.
I was walking down memory lane. Like, it's been more than 25 years. I've been shooting hits of one sort or another with CP24 or City Pulse or BNN or all the different outlets that have been in this building on Queen Street. So I'm a little bit heartbroken.
I know. End of something pretty iconic. But we'll still speak to you when we're in Scarborough. In the meantime, so much has been going on, right?
Yes.
In the last month especially. All the markets at record highs. Why do you think that is, given there's so much uncertainty right now in the market, trade, geopolitical issues? What do you think?
Well, it's a funny thing. Everybody, in the world generally says, oh, the market's this or the market's that, and they figure that's the major stressor in my life. It is not. People are the major stressor in my life. They always have been, they always will be. But the markets, the simple answer is interest rates. If, in fact, the U.S. Federal Reserve and the Bank of Canada are going to continue to cut interest rates, it's been a time-honored formula it's supposed to help the economy. It's supposed to make it easier for businesses to borrow and to raise capital and to do things. So it's supposed to be a stimulant to the economy. But where the money almost entirely goes is into investments, particularly the stock market. So the talk about the US Fed cutting rates has been going on for a while, particularly from the White House, which is an odd place for it to be coming from. But now the Fed has actually cut rates by a quarter. They'll probably do another couple of cuts between now and the end of the year. That money is going to go into the stock market. It makes it easier to borrow and cheaper to margin, and off we'll go again.
So you could see the economy growing even further?
No, not at all.
No, you don't. Okay.
No, it's not about the economy. It's about interest rates. So even if the economy doesn't do anything, and even if unemployment ticks up here and in the U.S., even if trade relations deteriorate bilaterally between Canada and the U.S. and between the U.S. and the rest of the world, even if all of those things happen, lower interest rates will boost markets because it just makes it easier to take money that's cheaper to borrow and put it to work. And as markets keep going up, they continue to feed on themselves. Does this have the makings of a bubble? Well, first one that I really lived through in this way was under Greenspan in '98, and we got the dot-com bubble. People think we're in a bubble right now. I don't think they've seen anything yet.
So with that in mind, are there particular sectors that you kind of like or look toward? I know a lot of people look towards the tech sectors right now. Is there anything in particular, or are you more focused on specific companies?
Sure, I'll try and be more interesting and more boring at the same time. So yes, you could talk about the tech sector. No doubt, if cheap money is available, it'll go into the things that have been doing well. But there are stocks that should do well if interest rates continue to come down. Anything in the property refinancing business in the U.S. We own a whack of a company called Real Matters here in Canada, REAL, which does very well in a declining interest rate environment as individuals in the U.S. refinance their mortgages, which you can do almost at will in the States. It's different than the system here, and then you can lock in lower rates for 30 years. The life insurance or insurance companies in general tend to do better in a lower interest rate environment because the present value of their future liabilities decreases. Mm-hmm. So there's a lot of sectors that could do well directly from interest rate cuts, not just indirectly from people pouring money into the market.
Okay. We will be back with Brendan Caldwell of Caldwell Investment Management, taking your questions on North American Equities right after this quick break. Stay with us. Welcome back. We are going to start with an email question coming in from Wally. That email reads, I'm interested to get an opinion or analysis of Synopsys, the chip designing software company. Okay, Synopsys, what do you think about this company? Do you like it?
We do, actually. We own it because we owned Ansys, which it took over. Synopsys was a leading chip designing company. They took over Ansys, and what they get from that is not only greater capacity to design chips, but they actually, if you want to design an entire device, you want a new watch or a new app of some, not an app, but a technology of some description. And ANSYS had the ability to do that. So the synergies and the reduction in competition in that space should allow Synopsys to continue on. So we owned it from the takeover, and we'll likely continue to own it. So I don't know who's going to win, whether it's going to be this telephone company manufacturer, because we've had, in my lifetime, I've still got my BlackBerry, but we've had 6 or 8 in my professional career leading cell phone manufacturers. But the companies behind those, the ones that make the chips, that develop the technology, that provide the picks and shovels to the industry, will probably continue to do well, because whoever ends up making the phone, someone's got to actually help make the chips to make the phone. And so as a company like Synopsys, we're very keen on.
For sure. Okay, let's go to the phone lines now. John is calling in from London, Ontario. Hi, John. What's your question?
Hello, Brendan. Brendan's Arthur Conan Doyle would agree with you about his greatest irritant, as both Sherlock Holmes and Professor Moriarty expressed the same view. My question's on Apple. Apple has been doing well on the handsets. The early numbers are good. It's had a good 1 or 2 months. What do you think of Apple for a long-term hold and maybe an ad here? Thanks very much.
Okay, thank you.
Apple, the game is afoot. That's a Sherlock Holmes, Watson reference. Never mind. We don't own Apple particularly in our portfolios, which is probably a mistake. It's been we own a lot of the other bigger companies like Microsoft and Amazon. Apple's been up and down for the last year. I don't even think it's trading at its highs, despite the fact the market is there. I am reasonably confident that it's going to continue to be the dominant player in the telephone space. But as I said earlier, we've had lots of companies own that, and technologies do change, and customer tastes do change. Apple's been a leader in this space for an awfully long time, but I'm old enough to remember when it was the dominant player in personal computers, and then it was almost out of business, and then it's come roaring back. So we think companies like, if you want to own a big, mega US cap company, I think companies like Amazon or Microsoft probably give you a little bit, I'm a little more certain of longer term.
Would you say, though, because I think John said he owns some shares of Apple, would you say hold on to that for now, though, or it's a pretty safe company, would you think?
Given that if at the beginning of my adolescence I bought Apple and done nothing else for the last 40 years, I would have done better than practically anything else anybody else could possibly have done. Yeah, you could do worse than just hanging on to your Apple, John.
Okay. Chris is calling in now from Victoria, BC. Hi, Chris. Hello?
Oh, sorry, hello?
Hi, what's your question?
Oh, yes. Hello, Lindsay, and hello, Brendan. And just on the topic of people, really quick, it takes all kinds to make the world go round. And Brendan, if I could please have your opinion on Freeport-McMoRan and copper in general, and if you're investing in the sector, I would really appreciate that. Thank you.
Okay, Freeport-McMoRan to start, and then we can go on to copper in general.
Broaden out. Don't own Freeport-McMoRan, not heavy in copper at present. When I said that the stock market might do well or should continue to do well in a lower interest rate environment, doesn't necessarily mean, and I think this is where I wasn't clear in communicating, is I don't necessarily think the economy is necessarily going to be that strong. For Freeport-McMoRan, one of the world's leading copper producers, of course, been back and forth, up and down, and I don't know that that's going to all of a sudden change to a huge surge in demand. I mean, you could make the argument that if you're going to electrify the world, you're going to need more copper wire, and so it's a way of participating in that kind of growth. But in terms of metal stocks, gold, we are much more heavily invested in gold as it's finally getting its due as a store of value, as the world's fiat currencies, people are going, the government-issued currencies, that is. So we don't own copper, don't own Freeport-McMoRan. But
if you're going to invest in a metal, you say gold.
I say gold.
Okay. We're going to move on now to Bill in Bowmanville, Ontario, calling in. Hi, Bill.
Hi. Thank you for taking my call. I'd like to guess a few on Comfort System. He's recommended it before, and maybe he has an idea of some other companies in a similar industry. Thank you.
Okay, thank you. Comfort Systems?
Comfort Systems, FIX is the symbol, FIX. They make air conditioning.
Yeah.
Which you think, oh, it's September, why would anybody need air conditioning? It's not about air conditioning your house, although they can do that. It's about data centers and technology. The company and the whole industry took a massive hit earlier this year with the DeepSeek AI technology coming out of China. I should have put technology in air quotes. Anyway, the whole idea is that you're going to need more and more and more cooling for computers and AI and Bitcoin mining and all the other things technology is going to do. Computers generate an awful lot of heat. So unless you can figure out a way to do it like cold fusion was 30 years ago, that somehow the Chinese came up with a way to create an AI platform for almost nothing with no expenditures. That's why Comfort Systems took a hit, but it's come roaring back since. And we continue to own it. Other companies in the sector, Carrier is one that I can think of off the top of my head, but Comfort Systems, again, the picks and shovels that make the technology industry run will probably keep going no matter who ends up winning. Someone's got to cool those computers.
Yeah, you need them. Okay, we are going to take a quick break. We'll be back, though, with Brendan Caldwell of Caldwell Investment Management, taking your questions on North American Equities. Here's how you can reach us. Welcome back. We are going to start with another email question. This one coming in from Henry. It reads, hello, can I get your expert advice on Lightspeed Commerce? Should I sell or hold? Lightspeed Commerce, cloud-based platforms. They produce cloud-based platforms for retail and hospitality. What do you think? Would you keep this right now if you have
we like the sector. I mean, the company we own in this space is a Canadian company called Fiserv. The symbol is FI. So we do like the space. We just think the FI is a more undervalued story. So and the reason we like FI, I know I'm not talking about the company that he's asking about, but I'm talking about the company that we like in this space, because they have a much more integrated approach. There's not a square here and a machine there and a thing there. They make it all a lot smoother for the retailer. And we also own Visa, we also own MasterCard. The whole payments automation process we think is a really good one. So I don't know Lightspeed in specific, but I do think the payment sector is probably a good one. And and FI is the company we own in that area.
So then within that sector, obviously each company is doing a little bit differently, but maybe hold on to what you have right now?
Well, I think Lightspeed's come down from a much, much higher place once upon a time, which is not a reason to own it. But if the reasons that you originally liked a stock, any stock, Lightspeed or anything else, remain consistent, if the story is still the same and the market just hasn't caught up to your insight into why you should own it, as long as your reasons are consistent, then I continue to own the stock. Yeah, if the fellow likes it. In general, that's my recommendation.
Okay. Another email now, this one coming in from Tom. It reads, I would love to hear your thoughts about Intuitive Surgical ISRG, worth holding it through this rocky period.
Well, it's a funny one. The medical device company that we own, I keep doing about the ones we actually do own and web, is Boston Scientific, which makes all kinds of kit. Whereas ISRG makes robotic surgery. Yeah. And the weird thing how one technology displaces another, the big thing they've been done is barometric surgeries, where they basically tie a person's tummy. They do that with robotics. Well, now that they have Ozempic and these drugs, there's a lot less robotic surgeries being done. So I think that's the idea, is that what has driven surgeries, particularly post-COVID, there was a real pickup in surgeries as people were catching up what wasn't done in 2021, 22. And so it's, yes, this rocky period that Tom describes is, I think, both because potentially replacement technology in a very big space of theirs, but I think robots are going to be used for surgeries in lots of other areas as well. Like Boston Scientific, their products are more ubiquitous, they're less capital intensive, and whatever the surgeries, they're going to use their products.
It's bizarre to see that when you see images of robots, robotic equipment kind of helping out in those, minimally invasive surgeries, right?
Yeah, yeah, it's like Star Trek.
Yep, the future.
Without the friendly little AI doctor from the next generation.
Okay, we'll move on. Kevin is calling in from Toronto. Hi, Kevin. What's your question?
Hi, thank you for taking my call. My question's on Taiwan Semiconductor. It's had a good run. Is it time to take profits, or would you be adding more? Thank you.
Okay, thank you. Yeah, look at the chart there. I mean, is it a good time to sell? Would you hold? What would you do?
Again, we own, it's going to be really annoying again, we tend to own the people that help design the chips that the semiconductor manufacturers make. I do think that there is a particular geopolitical vulnerability, Taiwan and China. I don't think it's as big as maybe some have thought. I don't think it's going to be an issue in the next year or two or three, and indeed, whatever else is false, I don't think it'll be an issue during the Trump presidency that we'll see increased global conflict. I don't think we'll see an invasion of Taiwan while Donald Trump is president. Love him or hate him, the world's a little bit safer place when it's afraid of the US president. That having been said, I do think that Taiwan Semiconductor is the dominant player in the industry, and there is an ability for that dominant player to continue to carrying on. Whether they end up making chips in the United States, the whole so-called onshoring of chip manufacturing, I think remains to be seen, because it's not as though you can just pick up a plant and plop it down somewhere else. And I think with the, I'll go on the other side, when Hyundai brings over hundreds of its workers to the United States and is building a plant and all of a sudden they're rounded up, probably not really incentive for foreign companies to build their plants and deliver their expertise to the United States. I think Taiwan is still going to continue to be the dominant chip manufacturer, and Taiwan Semiconductor is going to be the leading player in that space. So you've owned it for a long time. I wouldn't sell it just because it's up. Let your winners run.
Okay. John now calling in from Milford, Ontario with a question. Hi, John.
Hi. Good day, Brandon. I would like your thoughts on the banking sector going forward. I've owned them for around 30 years, and I'm up huge. I'm just getting a little bit nervous on the price to earnings on them. And can you see a correction in the banking sector? Thank you very much. Bye.
Okay. Thanks for your question. What do you think? Canadian banks doing pretty well?
Yes, the Canadian banking sector is the most effective lobby group in this country, and they've continued to do well. The 5 big Canadian banks, with National Bank in parenthesis thereafter, and the Royal Bank amongst them being the 8,000-pound gorilla. Since the hiccups at the beginning of this year, where there was concern about Canada in general and the tariffs, where the banks took a bit of a hit, they've been on an absolute tear. Even the TD Bank, with the all the money laundering charges and things that they've had to contend with the United States and the inability to expand in that much bigger market, even the TD Bank is up from where it had been. Our favorite is the Royal Bank. They continue to carrying on. They seem to set the agenda first among equals. So if it's good for the banking sector, it'll probably get approved. If it's good for the Royal Bank, it's certainly getting approved. So, yeah.
Okay, and Royal Bank is your favorite?
Royal Bank is our favorite.
All of them. All right, when we come back, we are going to take a quick look at Brendan's past picks. Stay with us, that's next. Welcome back. We're going to take a look at Brendan Caldwell's past picks now from October 11th, 2024. First one, ResMed. When you bought it, it's at $240.51. Now $272.76. Return of 13%. Total return of 14%. You did okay with this one. Do you still own this one?
We don't, which we probably should, because I got myself a CPAP machine just this spring. So you should always buy the products that one is using. The unaddressed market for so what ResMed makes is basically CPAP machines, which help treat sleep apnea, so that you don't stop breathing in the middle of the night, and you just keep on carrying on. It also very good at reducing mariticide, a wife murdering her husband. Yeah, because the conversation was had. It's been had extensively in my home, and I'm still alive. So I've neither died of sleep apnea, nor has my wife stabbed me to death, which was very much on the table, I think. So it continues to roll on. There's 1 billion people that probably have sleep apnea that has untreated, and as we're getting older, as we're getting bigger, and also it tends to tie in with the Ozempic that we were talking about earlier. So you go and get the weight loss drug, and they say, you've got sleep apnea as well, you should really get on this. It's part of the total package for losing weight. So they've seen sales pick up. You probably should look at it again.
Yeah, I mean, I have heard of a lot of people now using sleep apnea machines, right? So you think maybe you sold this one too soon?
I think we probably sold it a little too soon. They are the dominant player. There's another company, Philips, I think it's called, but they've had some recalls. And once you got a CPAP machine, and once you're getting all the equipment, the masks and things for it, and you're not going to ever change it, likely. So it's probably one that's worth continuing to own.
Okay, next one, Carrier Global Corp on the New York Stock Exchange. Was it $81.61, now at $59.80. Return of, I believe that's maybe minus 27%.
Yeah, why don't you just linger on that number a little longer? Why don't you just linger on it a little now?
What happened here?
Yeah, well, it didn't do good. Now, the trouble with these picks, and we'll try and find ones that we've owned a long time going forward. I think in some of these that we've got for my top picks, is that a lot of our strategies are momentum based. So while they're doing well, we own them, and when they stop doing well, we don't get sentimental about them. So we have, as I mentioned, in this space, the fix, the comfort systems. Carrier, it just didn't take off. We sold it actually long before even the Deep Six hit. We actually sold it within a few weeks of the show. So it's not done well, and I think there is a risk if everybody goes out and buys my top picks and then wants me to still owning them a month later. Maybe I will, but I'm not Warren Buffett. I'm not as old, and I'm not as rich, and I have better hair.
Okay, well, at least you come back and you hold yourself accountable, because we've got another one that we'll need to talk about, your other past picks. Equifax was $285 just over when you bought it, now at $253, return of minus 11, total return minus 10. I mean, Equifax is a pretty solid company.
Yeah, would you rather be early or late? I guess or would you rather be early or wrong? I guess you'd rather be early, and the difference between being early and wrong is whether you still have any clients left. But with Equifax, I think our thinking there was that it's other businesses that it helps companies with in terms of helping them with all kinds of employment type verifications. It's still a very good company, where it's going to be one of those companies, likely though, that as interest rates come down and people are doing more refinancing, they're going to be using Equifax's services more. So lower interest rates should actually benefit Equifax going forward, and no, we don't own it at present.
Got it. Okay, we're going to take a quick break. We will be back with Brendan Caldwell of Caldwell Investment Management, taking your questions on North American Equities right after this. Stay with us. Welcome back. We're going to go straight to the phone lines. Jim is calling in from Peace River, Alberta. Hi, Jim. What's your question?
It's on Whitecap. I love monthly dividend. They've been great to me over the last couple of years, but they're slightly under my average share price. What do you see for them down the road over the next couple of years? Thank you.
Okay, thank you. You haven't talked much about dividends yet. Is that something you're really concerned about when you're looking at a company?
Well, we like dividends.
Whitecap.
So Whitecap in specific and dividends second. Whitecap is one of our biggest holdings in our investment, a public investment company, Urbana Corporation, around which I am wildly conflicted. But we've owned Whitecap for years and years and years, and it's consistently grown its dividend. It's grown by both acquisition and discovery. We're still remain very keen on it. Hasn't moved a whole lot in a while, but I do think that it could be due for another move higher. So we owned it, like I think you got it up on the screen now. A lot of that 352% return we participated in Urbana, which has been great. Other energy stocks that maybe we haven't owned as long that might also give you some lift: Tamarack Valley, Spartan, New Vista Energy. Those are some other names. But in answer to your question about dividends, yeah, companies that are consistently growing their dividends, we actually have a whole strategy around it, particularly in the US. But if you're consistently growing your dividends, you are far more likely to outperform the market. Now, there may be some correlation versus causation there. If you're doing well, you're growing your dividend. But also, if you're growing your dividend, it probably leads to you doing well because you're really focused on shareholder return as opposed to empire building or option strategies or share buybacks. You're actually returning money to your shareholders. So even the big tech companies have started paying dividends, like Apple we talked about earlier a number of years ago started paying dividends. So yeah, we like dividends, and companies that are in a position to continue to grow them, that don't have a high payout ratio, that have room to grow those are ones that we particularly focus on.
Okay. Renata is calling in from Oakville, Ontario. Hi, Renata, what's your question?
Hi, good afternoon. I would like your opinion on Telus, please. Other than that it pays a pretty decent dividend, it's not much happening to this. Where do you see it going? And give me your opinion, please. Would you buy it at this point? Thank you very much for taking my call, and I wait for your opinion. Thank you.
Okay, thank you. Yeah, tell us at this point, what do you think about where it's at?
Well, what is their motto? We're way better than Bell. That was unnecessary and unkind. The stock performance has not been great for a long period of time, but they're actually my favorite carrier. Don't tell my friend Ed Rogers, but I really enjoyed working with Telus as my actual carrier. I'll put that plug in even on a Bell-owned network. But I think the business of cell phones in Canada, which has been, like many Canadian industries, an oligopoly controlled by a very limited number of players, I think there's so much pressure to open it up that I think that the competition likely to come in this space to Bell, to Telus, and yes, even to Rogers, will likely be significant. So I'm not a big fan, and it's not a company that we own from an investment point of view, but I do like their service.
Okay, and I guess we just need to do a quick disclosure now that we, of course, at BNN are owned by Bell Media. So we'll just say that, and then we'll move on now to another caller. Have to do it, right? You're
never asking me back now. I understand.
No. Okay, next caller, Michael, calling in from Montreal. Hi, Michael. What's your question?
Oh, hello. My question is regarding Kinross and gold miners in general. So in the past year, gold is up 40%, but Kinross is up 150%. So my question is, if gold continues at this rate, should we expect to see these kind of outsized increases from the gold miners? And if gold were to plateau, would we still see some price appreciation from the gold miners?
Okay, thanks for your question. I mean, look at that chart. Like, gold has just been going off the charts.
Yes.
What do you think?
Well, God rest Nick Barishev, his soul. He was probably Canada's foremost gold bug. He wrote a book literally saying $10,000 gold. The trouble with, he passed away a couple of years ago, but the trouble with hoping that one specific thing will work out is that you may not live long enough to see it. So God rest your soul, Nick. But yes, when the gold price does well, gold stocks do even better because they're leveraged to the price of gold. Kinross is one of the ones we own. Alamos Gold, Agnico Eagle. These are all, among the bigger Canadian gold companies. They're all done well. If the price were to plateau, I think it would only do so for a time. I think gold should have done better earlier, but the natural role that gold had been in terms of the other side of the U.S. dollar, the other side of all government fiat currencies. You want money that's real money than you bought gold. Now money that's real money is apparently Bitcoin and Ethereum. So that largely took the place, but now gold's having a moment, and I think will probably continue for a bit.
Okay. Now we'll go to an email from Jim, who is in Charlottetown, PEI. Jim writes, may I please have Brendan's comment on the MEG Energy takeover? Would he tender to the Cenovus or Strathcona bid? What do you think?
Cenovus, we're very keen on Cenovus, which is what we actually own. We think the synergies there between MEG and Cenovus are considerable. They're the least awful of the oil sands companies in that they're more like a traditional oil company where they drill down and the oil comes pumping out rather than wildly oversimplifying, but rather than mining and having these big open pits like the oil sands is known for. So they are the least awful of the oil sands companies. So in a world of 50% solutions, if we're having energy still from fossil fuels for the next little while, I think the Cenovus MEG merger would make a great deal of sense, both from a Canadian perspective, from an energy and an investment perspective. So we own Cenovus at present.
Okay. We are going to take a quick break once again. We'll be back, though, with Brendan Caldwell of Caldwell Investment Management, taking your questions on North American Equities. Here's how you can reach us. We'll be back in a moment. Welcome back. We're going to go straight back to the phone lines. Elliot is calling in from Hamilton, Ontario. Hi, Elliot.
Good afternoon. Bank of New York Mellon, the CEO, recently was on and indicated, in his opinion, they were in the second or third inning, so to speak, of revamping and focusing now on higher fee, higher margin specialty services. Please, your assessment of BK.
Okay, thank you. What do you think?
They've done well. The whole U.S. banking sector has done well. It's not one that we actually own. We do use their services up here in their partnership with CIBC. So we recently moved some business over to them. So maybe that's indicative of the fact they're going to continue to grow their business. That having been said, we're more Bank America. Would be our biggest holding along with JP Morgan Chase. So we do like the U.S. banking sector, just we own those two companies rather than BNY Mellon.
Okay, moving on now. William's calling in from London, Ontario with a question. Hi, William.
Good afternoon. By the way, my sister enjoys working with your office in Georgetown. Oh. I've owned Amazon and Google for a long time. Should I buy some more?
Okay, thank you.
Well, I won't say that you should buy some more, but I'm really glad your sister is doing well. I always appreciate the on-air endorsements. Yeah, so I do think that, as I said, interest rates are coming down. That is going to continue to drive this market. Amazon and Alphabet are going to be two of the leaders. I think there's going to be still some shaking out as to what the business model of each of those companies looks like, or whether the world is big enough for both of them to survive. For the longest time, they've been in separate silos, different spaces. One internet search, one delivering books, and then everything else you could possibly imagine to your home. But as the how do I say, the world of technology gets larger and larger, and companies are taking over more and more and more, both of mind space, but also the real economy. I think there will be a collision between some of these biggest of the big technology companies. But yes, I think for the foreseeable future, they're both going to continue to do well, particularly in a lower interest rate environment.
You have a preference out of the two?
We own the Amazon in our portfolios. They are among the AI leaders. So yeah, if I had to pick, I'd pick Amazon.
Okay. Harry is calling in now from Guelph, Ontario with a question. Hi, Harry. What's your question?
Hi there. Hope you guys are doing well today. Thoughts on Intel at this price for an entry point? Young investor looking for 10 plus years. Yeah, what are your thoughts? Thanks.
Okay, thank you. Intel currently sitting at just over $29.
Yeah,
what are your thoughts?
Well, I thought you were going to, Harry, ask me about government getting into the capitalism business, that the U.S. government is picking winners by deciding which companies they're actually going to buy chunks of to drive. So I think the U.S. government now owns 10% of Intel. That sort of state capitalism is a whole thing. I don't know that it's necessarily a recipe for success. I had endorsed Taiwan Semiconductor in this earlier in the conversation. Intel it's funny, was the leading technology stock of my youth, one of the first ones that powered Intel Inside, powered all of the technology since forever. And now not so much. I mean, we saw Taiwan Semi's chart earlier versus Intel's today. I don't know that Donald Trump's endorsement of the US government's cash is going to actually turn that around.
Not doing it any favors at the moment?
Well, I think it'll be interesting sociologically to see, as for my entire growing up, governments were divesting themselves of the corporations that they owned. Here in Canada, we owned everything, Petro-Canada, among others, Air Canada, and we divested and we divested and divested and let the markets do what they will. And now we seem to be going back the other way. It'll be interesting to see. What that'll bring.
Okay, moving on now to Gulem in Toronto. Hi there. What's your question? Apologies if I mispronounced your name.
Yes, you did.
Okay.
My question is on FFN. I'll tell you what triggered the question. My GIC comes up for renewal and paying a ridiculous 2.9%. So I thought I'll put some money into some dividend-paying stocks. And the two stocks I had in mind was Freehold Royalties and Telus Corporation. But now I came up with a third one this morning, which is FFN. It pays almost a 16% dividend. And it's an investment in financial services company. Is that a good strategy? Should I buy it at the current price? And is the dividend sustainable? I'd appreciate your opinion. Thank you.
Okay, thank you.
Thank you. Well, I think you got to pay attention to what you're actually doing there. Sorry if I sound condescending, but FFN and any of these split share cores are just that. They're not a single thing. They have a capital portion and an income portion. And the capital portion, there's a preferred share portion, which I think is probably trading around $10 or so. Whatever you've got up on the screen there, I think you probably have the capital portion, which would be subject to very large swings in price. It's not a preferred share. There is a preferred share class that pays out a regular dividend, not 16%, but higher than the dividends of any of the single banks, because they've literally split the shares into these two parts. So I would really talk to an investment advisor before you run off and buy a split share corporation, because I don't know if you saw the chart there, it was $2, is now at $8.
Yeah.
What I think you had up on the screen is not the preferred share one, but the capital share one, which can have extreme volatility.
Okay. We're going to go on now to our next caller, Peter, calling in from Vancouver. Hi, Peter. What's your question?
Yeah. Oh, good morning. Great guest, Brendan. The ladies want...
Hello, Peter. It's good to hear your voice again.
Hello, you are their idol. The ladies want to ask their idol about, and their expert advisor about BCE, which they have lost lots of money. Can you extend your kind hand and lead them out of darkness into light? Thank you.
Okay, thank you.
Peter, given this is my last show in this location, it's good to hear your voice, sir. I think, as I said about Telus earlier, BCE's obviously had some challenges. Its share price, it's cut its dividend. That, for whatever reason, was a bit of a relief to the market, just because they knew it was inevitable. I do think that there is more competition coming in the telephone cellular space. So I think BC is going to need to reinvent itself if it's going to continue to grow and expand. So I think this whole sector is going to be under a lot of pressure. But so I'm not sure that BC was the buy and hold one decision stock that it might have been for several generations.
So not your favorite anymore.
Maybe it never was. I don't think it ever was my favorite, but it's been one that's been under a lot of pressure, and I think it'll be a while before we see a turnaround in that, not just that company, but in that sector.
Okay, and just if you missed the disclaimer earlier, I'll say it again. Bell Media, of course, is the parent company of BNN. That's it for calls today, but don't go away. Brendan will share his top picks after the break. Stay with us. Join us tomorrow on Market Call. Michael Sprung will be on the show. He is president of Sprung Investment Management and will be taking your questions on Canadian large cap stocks. And if you miss Market Call, you can always check out our daily podcast. You can find it on iHeartRadio as well as other platforms. And you can also watch full episodes on our YouTube channel. And time now for top picks with Brendan Caldwell. Okay, so let's go through these. Your first one, UL Solutions.
It wouldn't be me if I didn't give you one extremely boring company. So ULS, U.S. company, it does product testing.
Okay.
Like, you really can't get more boring than that. And nobody's...
But necessary.
Necessary, yes. And boring and necessary has its place. And you can actually do well in fits and starts with boring but necessary. And this really two themes, onshoring and outsourcing. So as companies that used to test their own products are really outsourcing it to people that can do it well, like ULS, I think you're going to see a continued growth in the business. There's not a lot of analyst coverage, but also it's as there are reshoring or onshoring of American businesses where they're building more products here in North America, there's going to be more demand for actually testing those products here in North America. Mm-hmm. And they don't just do the products, they also do the whole systems. If you have a manufacturing system or you have a product manufacturing plant, they also do the testing of that. So a boring business nobody's really looking at that should be the beneficiary of two very large economic trends in North America should do well.
Okay, we'll have to wait and see. Next one is Motorola Solutions on the New York Stock Exchange. Tell us about this one. Why do you like it?
Well, I like it because we've owned it a long time. We're probably going to continue to own it a long time. It is the OG phone company. Before all the other phone companies, it was Motorola. All of the, Vietnam or even Second World War movies where you see they got the great big handset, that was Motorola. They were the dominant phone company even as we transitioned in the 80s to using cell phones. They since, they're no longer in Motorola flip phones may be making a bit of a comeback, but where they've actually done well is in communications and security, where you absolutely have to have the thing to work. I mean, they got their start with the Army, as many technologies did, and now they're still the number one communications device for police on their jackets for videoing what they're doing. They're used by all kinds of government agencies that are at the pointy end of the spear. Doesn't necessarily make them, how does one say, the sort of company that does the technologies that are fun and happy, but they are very necessary. So they are the technology company that provides the video security, that provides the telephone services for governments, for armies, for military and police. So. And for security, and that's continuing to be a growing business. We've owned it for, I think, 4 years, which is sort of long-term for us, and we're likely to continue as that sector is not showing any signs of abating. It's
pricey, though. I think $475 stock price. That doesn't really concern you? It's kind of like if you had the money?
Well, I mean, one can either do a split, or one can be like Berkshire Hathaway and be trading for $400,000, or whatever the number is.
Good choice. Okay, let's move on then. Your last pick is TKO Holdings.
I have to do one that's fun, and this TKO is UFC and WWE.
Right.
This one goes out to my brother Theo. He and I went to WrestleMania 3 back in 1980, whatever it was, together. UFC, which is real fighting, and WWE, which is, well, entertainment fighting, shall we say. Have merged, and their combined entity has been a dominant force. The stocks continue to do well. They have a loyal fan base, a global fan base. I was looking at this one compared to, I was looking at it just looking over the companies we own. It's a $40 billion market cap. And I was comparing it for no particular reason to the New York Stock Exchange, to the New York Times, which has a $10 billion market cap. So, jumping off the top rope with an elbow has become very, very big business. And this partnership of real fighting and entertainment fighting, it's really unique in the world. I mean, if the NFL or Major League Baseball were its own public company, it would probably be multiples of that. Sports has become a business like no other, and TKO is a business like no other, and it's really the only set of leagues that you can buy as a public company in any sport.
And you think it's going to, like, I'm just looking at your notes here about it, you think it's going to grow even further, right, with more partners's? Like, it's only up from here. Obviously, it's your pick.
They had a deal with ESPN for the longest time. Their deal with Paramount, I think it gives twice as much revenue. $5 billion seems to be the number that's rattling around in my head. I may be understating that. So just the opportunities to grow their business are considerable.
Okay. Thanks for coming in. Appreciate your time.
Thank you, Lindsay.
Thank you for joining us today. Thanks for watching Market Call, and we will, of course, see you next time, which is tomorrow at noon.